All right, so if you want to know how an LLC partnership works for tax purposes, I'm going to cover it in this video. I'm going to show you a real life tax return for 2024. So if you are an owner of an LLC, whether it's 2 members, 5 members, 100 members, I'm going to cover the basics in here, and then the flow through of the owners receiving a K-1 and how they report that in their personal return. If you have any questions, leave them in the comments below. Thanks again for watching. All right, so thanks for watching this video. This is going to be very basics of an LLC tax return. So an LLC that's taxed as a partnership. I'm going to cover the very basics, what you kind of need to know. Hopefully you're using a CPA or EA to kind of complete this form for you, as it gets a little complex and there's a lot of kind of pieces to it. But if not, and you're going to try to attempt to do this yourself, hopefully this video will kind of guide you. So first off, this is the tax form, so you can Google it. You can kind of find this form. And this is due March 15th. Okay. Now, if you're not ready to file by March 15th, you're allowed a 6-month extension. But to get that extension, you got to file the extension form. And it's this 1-page form here. So 7004, you're going to put the business name, address, EIN, and then you're going to find the 1065, which is 09. You're going to put that right here. And then you're going to fill out the rest, and then you're going to send it in. If you're going to mail this form, make sure you mail it certified return receipt and keep that receipt because that's proof that you mailed it on time. So this form is due by March 15th if you're not going to file the regular form. And this buys you another 6 more months. So back to page 1 of the return. So you want to think about the LLC return as more of kind of like informational, okay? So the LLC really doesn't pay any tax, okay? So you're going to put the address, you're going to put the, the name of the company. Here we're using Bueller LLC. Here's the EIN. This is your first time filing this return. So you started the LLC in 2024. You're going to mark the box initial return, okay? If this is your final return of an LLC, you're going to mark it as final. Now, one note here. If your LLC stopped, to say the last day was October 1st, the clock starts. You have 2.5 months to file this return as a final return, okay? So you can't wait till December 31st and the clock starting right there. Whenever the LLC ended, right, that when it ceased to exist, you have 2.5 months to file this return. Now, if this is your first year filing this return, you also have the option to select, you need to select one of these accounting methods, cash basis or accrual basis. This is important. I can tell you most of our clients, 99% are cash basis. And I can kind of get into that another time later, but most businesses, it's more advantageous to be cash basis than accrual. There are some businesses where it's more advantageous to be accrual than cash. But, I gave a presentation today to a bunch of startups. It's important that you're using QuickBooks, Xero, or some type of an accounting software to kind of maintain your books and records, your financial statements, because you're going to need a balance sheet. You're going to need an income statement to kind of complete this tax return here. Okay. So again, on page 1, this is where you're going to put the income statement. So your revenue, cost of goods sold, and then your expenses, salaries and wages, guarantee payments to partners. So I'm going to stop right there. Partners, right? So members, owners of the LLC, you don't get a salary, right? You don't get a W-2. You get guarantee payments or you get distributions. Okay. So, and that's, if it's guarantee payments, they're going to be showing up right here. If it's, and if you're paying your employees wages, that expense is going to be showing up here. You got rent expenses, right? Taxes, you paid interest expense, depreciation. Then you get to other deductions, right? Because you can see here, your income statement probably has 20 lines, 30 lines, 50 lines, 100 lines. We've seen a lot of chart of accounts here. So most of the expenses, most of your deductions are going to be shown under here, other deductions. It's going to get summarized here, but later in the tax return, you're going to have to itemize it. But it gets all summarized on this line item. Then you take your revenue less your expenses, and you're going to show a profit or loss here. Okay. So that's page 1. Then we're going to skip to page 5 of the tax return, or let's see here, page 6, which is the balance sheet. And again, this is another reason why you want to have an accounting software, because if you're a new company, you're trying to manage your records on Excel or Google Sheets, it gets messy really quick. So this is where you're going to put your cash, right? It's essentially your balance sheet. So your cash, if you're accrual, you're going to put your accounts receivable. If you have inventory, you're going to put it here. Any depreciable assets, any other assets like prepaid expenses, you're going to put that here in the asset section. Liabilities, credit card liabilities, right? You're going to put that there. If you have any debt, right? Convertible notes, safes, any of that goes here. Again, if you're accrual basis, you're going to have accounts payable. If you're cash basis, you're not going to have any accounts payable. But credit card liabilities, right? If you have an ending balance in credit card liabilities, cash or accrual, that gets reported here, okay? So that's the balance sheet. So there's really kind of 6 pages that are the key parts here. And these, Schedule B here, these are some other questions you're going to have to answer, right? Does anyone own over 20%? That gets kind of disclosed here. But I do want to call out, see one question here, since the due date is nearing, and it talks about 1099s. So did you make a payment in 2024 that would require you to file 1099s? So did you pay any contractors over $600, right? Did you pay any attorneys over $600? If the answer is yes, then if yes, did you file these? So the IRS kind of really looks at this. So you want to make sure that you answer this correctly. Remember, 1099s are due January 31st, which is next Friday. And then you got Schedule K here. There's some more questions. And again, trying to fill this out yourself it gets tough pretty quickly. And then you got the balance sheet, which we just talked about here. Okay. Now I'm going to populate some of this return just to kind of show you what the K-1 is going to look like. So this is how I'm going to enter some of this information here, and the software, I apologize, but there's kind of slight delay here. But you can see here on the general information, here's the input screen. You're going to put the state where you're incorporated. So here's another comment that we see a lot of companies get missed. Remember, you want to make sure that you're registered in the state that you guys are doing business in and where the members are. So gross receipts, let's just say this company did $100,000 in sales. We're going to go down here and we're going to go to the other deductions to say they had rent of $20,000, salaries, they paid salaries of $25,000. And then you can see this other deductions. We're going to say we got marketing expenses, say that's $6,000, and just say they have attorney fees. We're going to put $5,500. Okay, we're going to do and then we're going to say we got our 2 members, right? So 2 owners here. So member information. This is going to take some time. Here we go. So first name. There is. And then right, and then we're going to go to their ownership, right? We're just going to say for simple purposes they're both 50% owners, okay? 50% owners. And then you got to fill out the address and all that. But I'm going to show you here this tax form, which is called the K-1 here. So let's go back to page 1. And you can see here's the revenue, expenses, right? We had salaries and wages, we had rent, and then we had other deductions. Remember, it was marketing and attorney fees, right? So total deductions was $56,000. Total net income for the partnership is $43,000. Now, the partnership here, the LLC, is not going to pay any tax. So even though it's showing a profit here, it doesn't pay the IRS tax on this. What does happen is there are these K-1s, okay? So Ferris, he's going to get a K-1 because he's an owner of the business, and his K-1 is going to show 50% of that income right here. So 50% of 43,500 is 21,750, and that's ordinary business income because he's active in the business. So that shows up on line number 1 here on his K-1. And you can see here he's 50% owner, profit loss capital, and all this ties to the operating agreement. And again, I go back to this operating agreement. It's very important to have an operating agreement for many reasons. If the two partners kind of break up and there's a big dispute, you can always go back to the operating agreement. But also, if you ever get audited by the IRS, they're going to ask for the operating agreement, okay? Because that kind of dictates what this K-1 is going to look like. So the LLC is going to issue this K-1 to Ferris. The IRS is also going to see this, okay? Now, Ferris, on his personal return, is going to report $21,750, and he's going to pay tax on it. So essentially, that's how the partnership pays tax. So the partnership, or the LLC, is known as a flow-through entity, kind of like an S-corp. And the LLC doesn't pay any tax, but it flows through, so that income flows through to the owners, okay? So here is, that was Ferris, and here's Cameron, right? So they're 50-50, so what they report here of income is the same. So again, the IRS is going to get this K-1, but Cameron and Ferris are also going to get this K-1, and they cannot file their personal return until they get this K-1, okay? So first, in terms of the steps here, the LLC files a tax return. The LLC is going to issue a K-1 to both Cameron and Ferris. Cameron and Ferris are going to use their K-1 that they got and put that on their personal return. They're going to pay taxes on that. Now, you might think, wait a minute, how is Cameron and Ferris going to pay the tax of that $21,000? Well, what happens is, and it's also noted in the operating agreement, is there's like a tax distribution. So the LLC, what they typically do, will make a distribution of some amount to help Ferris and Cameron to pay for their taxes. And that distribution gets reflected here in box number 19. And they're going to get the amount from the LLC, and they're going to use that money to help pay the tax that they got in the K-1. So that's very basics here of the flow through of an LLC. Okay. Now this is the federal component, right? Then there's the state component, and every state is different, right? So depending on where is everyone kind of doing business, the states have their own different, rates. Now the states, could have a tax, right? So in Illinois, there is a replacement tax of 1.5%. And, so in this case, since they're, registered in Illinois, they're going to have to pay a 1.5% tax to the state of Illinois. But again, they're not paying anything to the IRS. Now, I don't want to overcomplicate things, but if you have, just say, in this case, there were two members, they're both in the U.S., okay, very simple. Just say one of your members is an international member, which is okay with an LLC. In that case, there is a form that needs to get filed, and it's an 8804 form. I'm trying to find it here to kind of show you. And that 8804 will generate some tax that the partnership has to pay. So that's another way, or another reason why the partnership would have to pay tax to the IRS, is if it has profit and there's an international owner. Okay. But if, keeping it all simple, you got two U.S. members, the company was profitable, there's no tax that gets paid to the IRS. Off was, okay, so here's a question I get. Well, what if the partnership is in a loss position, right? So they didn't have any income, but they spent a lot of expenses. Okay. Now what? Do they need to file a tax return? The answer is yes. should file a tax return here. As I noted earlier, the partnership, whether they have income or loss, they don't pay any tax. Okay. The key is it flows to the partners. So in this case, it's in a loss, and Ferris has a loss of $28,000. Okay. Now, if he has tax basis, okay, and I don't want to just say he put in 30,000, and I don't want to get too complicated on this video here, but if he contributed $30,000 in this company, okay, and he has a loss of 28,000, his ending capital is still positive. Okay. So he has basis in this. He was active and the company launched. So the company is live. It's an active trader business. They have customers. It's not paying customers. He could utilize these losses on his personal return, to offset any other income that he has. Okay. So that's why you want to, file a return even though you got losses. That's one of the reasons. And if Ferris wasn't able to use these losses, so just say he didn't have any tax basis or anything, those losses don't go away. He can utilize those losses in future years. They carry forward, which is nice. So it's important, right? Even if you got losses here, you want to make sure that you're still filing a tax return. So that's pretty much it in terms of the LLC. And, I don't want to, go back on some of these other social media videos about, you form an LLC, you can save on taxes. You can see here, you got to have an active trader business, right? And, this is where you report your income and your expenses. But by having an LLC doesn't mean you're really saving on taxes or anything. It just kind of legitimizes everything. Another point here is if you're in real estate, right? You own real estate. You should always put the real estate in an LLC versus an S corp. Okay, that's another thing. It's another side topic, different video for a different day. So here's the LLC, taxed as a partnership. Here's the tax form that you're going to file. Due date is March 15th. Thanks again for watching. Let me know if you have any questions.